what all strategy boils down to, this is so important to understand, because once you grasp this, then everything becomes simple and you understand why certain strategies work, why they work the way that they do, and essentially that all good strategies are based around the same thing. Okay? So, number one, they're based around a key area. So, price is flying all over the chart, right? We're not going to keep an eye on price every single little movement, every pip. We really don't care. Sometimes it's consolidating like this, and then it'll have a move like this. And what it boils down to is having a key area that you're waiting for price to come back to. So that key area could be a horizontal line of support and resistance. It could be a trend line where you're waiting for price to come back after it's hit twice. You're going to buy on the third touch, the fourth touch. It could be a Fibonacci. Let's see here. Okay, it could be a Fibonacci buying at the 50, buying at the 618. It could be a 200 EMA, in this case acting as support. As soon as price comes down to the 200, you're going to buy. It could be a combination of the 14 and the 50 EMA, where as soon as they cross, then you're going to go long. As soon as they cross the other way, you're going to go short. It can be so many different things. It can be an RSI. You're looking for divergences. That can be your key area. There's so many ways that you can come up with a key area, but the essential thing here to take away is that every strategy boils down to simply having a key area. So in our case, we're going to be using horizontal support and resistance levels for one of our key areas, and the other one we're going to be looking for order blocks. Okay, and I don't want you to get all scared or flustered at the term order block. I know that online people make it so confusing. I mean, people come up with this fancy language to use and a dozen different terms for order blocks and mitigation and all this confusing shit, and honestly, that's not the way that I teach it. That's not the way that I understand it. I don't understand half of what people are saying out there when they teach order blocks. I'm sure there's a lot of fancy stuff that I'll never know. But the way that I teach it works. As a matter of fact, this is a recent trade right here, an order block trade, which we'll actually go over. This right here is a support and resistance trade. So an order block trade coming off the back of a support and resistance trade right there. I can't think of a better example in a better way to teach these two methods that we're going to be using to reap profits from the market. So that's the first thing, is the key area. Now the second thing, okay, that you need to understand, that every strategy to some degree, some way or another, has this, okay, is validating the trade. So you need validation before you take the trade. How many times have you bought on a touch and you sat there and you've got your line all mapped out and you put a lot of stock into this area? You're like, oh man, this is a strong area. This is a really hefty area. Nothing's going to get through here. And then price comes down. It touches the area and you buy or you sell, and it just completely breaks through. So we're not going to be buying on any touches. We're not going to be, basically putting a lot of faith in certain levels, or saying, hey, this is a weak level, this is a strong level. Instead, we're just going to plot out the correct levels, and we're going to see if price gives us validation when it comes to those levels, and then we're going to go from there. So for our validation, what we're going to do, let me teach you actually the way that, let's go down to the 1 minute and we'll talk about validation. So here was our key area just recently. This trade is still live, by the way, still going. I've taken partials on it. Price came up here very, very close to the key area, close enough for me to say, okay, cool, I'm going to look for validation. So the validation came in the form of a double top. Here's point 1, pull away. Here's point 2. And then on the second point of this double top, and this is something that I had to find out for myself. This is something that took a lot of sweat and tears. I used to ask people all the time. I would ask, people in paid communities. I would ask, mentors and things like that. Hey, how do you know which double tops are worth taking? And no one could ever tell me the second point of the double top needs to be validated with a candlestick entry pattern. I just had to figure this out on my own. And so this is something, man, when I figured this out, it changed the game for me. Because how many times have you bought a double top if you've been trading the markets for a while? Something like this. Only to find, and let's say that you bought, right around here somewhere, only to find that happens and it just turns around and breaks. And you walk away kind of feeling like an idiot because you're like, man, I shouldn't be doing this. I guess I'm just calling tops because it just keeps breaking, retesting, going, fake double top, breaking, retesting, going, just over and over and over again. And so I'm going to show you how to stop that nonsense because, man, that can be annoying. So what we're looking for right here for validation for this part of the strategy is a candlestick pattern. In this case, it's a momentum reversal, okay? And you'll learn all about this candlestick pattern and the others that we're going to be looking for. But that is what made this trade validated. That is what validated this trade right here. And that's the whole reason why I took this trade, is because it's paired with a key area and it's paired with validation on a lower time frame. So those two steps are the basis, just the absolute basis for all strategy, no matter what strategy you're using. Now, if you're using a really bad strategy, then sometimes they'll trade one time frame and it can be kind of fun. Hey, look, it's so easy. I can just trade one time frame. But what'll happen is that you won't get very good entries. So like right here, if we look for a momentum reversal right here, this is a key area. That key area was just created right there. So we would be looking at it right here. So let's take this, for example. An engulfing candlestick pattern is another candlestick pattern that you're going to learn about that's very powerful. Price comes down and then it puts in a really nice strong engulfing candlestick. Well, if we got in right here, it wouldn't leave us. First of all, our profit target would probably be 1-to-1, and we wouldn't really have any time to go to break even, any time to manage the trade. It's really just we're going to hit the 1-to-1 or we're going to quickly lose the trade. And so it doesn't give you a good entry. So dropping down to the 1 minute, let's go to this same area. And I was actually following this trade yesterday. So that right there, that can be our engulfing candlestick pattern right there. So we're pairing the 15-minute with the 1 minute. Now you understand what all strategy boils down to is essentially the same thing, just over and over and over again. Some are better than others. Ours is going to be very, very simple. What I want you to be able to look at the market, roll up to your charts in the morning or whenever you want to trade, and be able to identify what's going on so that you can logically take the trade, not be second guessing yourself, not hoping the trade works out and things like that. But just once you get to the level of where you can rinse and repeat things, then it becomes really fun. And yes, trading actually can be fun. I know that for a lot of people, it's frustrating. It was frustrating for me before. It was very emotional. I would lose trades left and right, take back-to-back trades. But through simplifying trading has actually become relaxing.